Good morning, investors and corporates. Welcome to SET Digital Roadshow 2021 Year-End Performance Review. This session will run about 45 minutes, including Q&A. During Q&A, investors may leave your questions in the meeting room chat box or use your raise hand function. Then we will open your microphone so you can ask the question to the company directly. May I now invite HANA MICROELECTRONICS Public Company Limited to start the presentation, please.
Okay, good morning, everyone. Welcome to HANA's fourth quarter and year-end review. So for the year, HANA generated operating profits of 2.2 billion, up about 29% from the previous year. But for the fourth quarter, we were down 9% to 391 and down 44% on the quarter. Sales increased 23% for the year, and operating margins were flat. We generated about 3.5 billion, up 21%, but net profits were down 19%. For the quarter, sales were also up in similar amount, about 19%. Margins were down 9%. Sorry, operating profits was down 9% and margins down 2%. So why did our operating profits drop significantly in the fourth quarter? There were two main reasons, but the biggest one was an inventory adjustment taken in the fourth quarter of 243 million baht. This was due to the overhead absorption in inventory, which the auditor actually should have taken this across the whole year, but was adjusted in the fourth quarter, resulting in a substantial amount of 243 million, which should have been expensed over the whole year. This excess overhead going forward will be expensed over each quarter and not in just one quarter. This is not a cash item. In addition, we took a charge of 34 million baht, which relates to machine impairment for equipment that management believes will no longer be productive going forward. This is also not a cash item. Now, why did our net profits drop significantly at the year end? We took a charge of 423 million relating to an investment the company made about three and a half years ago in the Credit Suisse Supply Chain Fund, which was closed at the beginning of last year. Up until the end of this year, we have received about 70% of our original investment. And whilst Credit Suisse continued to work to return funds back to the company and all shareholders, we believe that it's going to get a lot more difficult going forward, and that's why we felt it appropriate to take this charge. If and when there are any additional returns made to the company, they will be recorded as an exceptional gain. Moving on to the business, Lampoon generated about, well, pretty flat for the fourth quarter year on year, but had a strong performance for the whole year, up 18%, from 8.6 to 10.2 billion. We saw strong demand for auto parts and test and measurement business, and a growing demand for EV-related control boards and sensors. Our wafer back grinding business, which relates to storage, was very strong and continues to be very strong. We did have a COVID outbreak during the year, during the fourth quarter, but it was minimal, and there was no major impact as a result. New auto sales globally it is estimated that the number of sales for units sold last year still well down on pre-COVID sales. So we believe there's a long way to go for the auto industry to recover. Moving on to our China operation for the micro business, we recorded sales in the quarter up 38% and for the year up 21%. And whilst these top line numbers were quite strong, we did suffer from material shortages and had to buy at inflated prices in order to keep the supply chain operational. In addition, the strong renminbi impacted operating margins. So unfortunately, we were not able to match the top line growth with bottom line growth. Smartphone shipments grew about 4%, driven by 5G. But again, as you look at this chart, you can see that despite the increase, the overall shipment of smartphones still lags pre-COVID, shipment levels. Again, we believe this industry, like the auto industry, suffered from a shortage of chips, which has been a big problem for everybody. Moving on to HANA Ayutthaya, our OSAT business, we recorded year-on-year quarterly sales up 27%, and for the year up 25%. So a very strong performance in our main operation in Thailand. We saw continuing strong demand for industrials, mobiles, and autos, and we have signed some interesting new customers playing in the MEMS timing solution space, oscillators and resonators, to further diversify our portfolio, which is very important. We completed a 25% expansion in terms of floor space, and we are currently planning to add around 15% more equipment, which will come in during the first half of this year. I would say overall, Ayutthaya made a very strong recovery from 2020. A combination of higher operational efficiencies and strong cost control, plus in this case, favorable exchange rate, because the Thai baht weakened, unlike the renminbi, which strengthened. So that generated both good top line and bottom line contribution. Moving on to China for our OSAT business, sales in the quarter up 37%, and for the year up 52%. We saw strong demand from local customers. Our plan is to refocus our China operation on domestic markets. So that's a work in progress, but it's doing well. But again, like the EMS business in China, despite the strong top line growth, we suffered from having to pay excessive amounts of premiums in order to get materials, which impacted the overall profit margins, and the strong renminbi also didn't help either. So again, despite strong top line growth, we were not able to match that in terms of operational profit growth. Here's a slide just to give you an idea of how China is growing aggressively its domestic IC industry. And just last year, greater than 20 billion was invested in a number of wafer fabs, all of which have to be assembled locally. So this is where we believe there's a good opportunity for our operation in Jiaxing to support this growth domestically. Gartner's projected or has said that revenues for last year for the whole industry, semiconductor industry, grew 25% to 583 billion, which is a record. So obviously we all know that the semiconductor industry had very, very strong demand as a result of the work from home and the COVID situation. In terms of the units that we assemble, we now are looking at this in terms of wire bonds, which I think is more appropriate. So we're trading around 4 billion units wire bonds per quarter. You can see the third quarter last year, the drop because of the COVID situation we had in Ayutthaya in the third quarter, and then the recovery again in the fourth quarter. Moving on to the US, for the fourth quarter, sales were up 76%, and for the year, 41%. This was driven predominantly by our new product line, inlays, which we started at the beginning of last year and has been very, very successful. Unfortunately, again, a shortage in ICs, inhibited us from recording even higher sales. But nevertheless, it was still a very, very good result. Growth for tire tags, which is the other main industry for us, was flat during last year due to the COVID situation, but we believe this year will be a strong recovery. Telecom and consumer was also marginally higher, and we hopefully see improvements this year. Once again, issues relating to supply chain And I would say in terms of COVID impact, our operation in Ohio was affected the most out of the whole HANA group, because in America, they don't believe in masks or anything. So we had consistently a large proportion of our workforce out during the course of most of last year. So it was a difficult situation. HANA Ohio is the world's leading producer of RFID tire tags. We have signed agreements with Michelin, which is the main patent holder of this technology, where we can use their patents. Obviously, we pay a royalty and market these devices to many other tire manufacturers. And we believe this is going to show a pretty good growth going over the next 3 to 4 years, because now we're moving beyond what we currently do, which is the commercial tires, and moving into passenger tires, where the volume is at least 5 times. RFID inlays, as I said earlier, was the big top-line driver for Ohio. This is a product which will go on virtually everything that is sold. So big retailers like Walmart, Target, and these sort of large national retailing champions are labeling or attaching an RFID tag to everything they sell. So we're talking about billions and billions of units being produced. And the advantage of this technology is that they can improve their inventory management significantly, because you can track the inventory within seconds as opposed to hours using RFID tags, because it sends a signal identifying the item that the tag is attached to, as opposed to somebody having to go up to it with the old-fashioned barcode reader and trying to read each individual unit. And apart from that, the significant improvement in theft, shrinkage, where many companies suffer predominantly from losses within their own business. So the retail industry is adopting RFID tags, and this is explosive growth and will be a big driver for our business in the US going forward. Moving on to Cambodia, we recorded sales in the quarter up 16%, just flat for the year. Cambodia is still struggling, to be honest. We were not able to introduce any new customers during last year because as a new site, many companies, if they're interested, and they are interested, but they want to come and have a look at the place, and they can't because of the COVID restrictions. We have now identified a couple of new opportunities, which we hope can go into mass production in the second half of this year. Cambodia still records a loss, although it's minimal, and we are doing our best to hopefully get to a break-even level by the end of this year. In terms of end application, the biggest growth was the industrial and opto businesses and RFID. So moving forward, looking ahead a little bit, we all know that the world has gone upside down now with the conflict in Ukraine. The sanctions will impact and energy will impact. So I would say at this point in time, HANA's order book still remains fairly robust, similar to the second half of last year. It's probably a bit early to understand what the impact is going to be. The first casualties, we believe, are going to be Android handsets produced in China, because Russia is a large consumer of China mobile handsets, and Russia can't pay for them now. So I think there's going to be a drop going forward there. It's going to affect the automotive business, not so much in demand, but in terms of supply chain, and I'll talk a little bit later on about the impact on that. We think industrials will remain strong despite the situation, and most customers tell us that their biggest concern now, and even more because of the conflict, is concerns about supply chain. If we look forward to the semiconductor industry, predictions for this year, this is pre-conflict. Analysts were projecting around 9% growth. And as I mentioned earlier, the chip shortage would continue to give problems to the industry throughout most of this year. In addition to that, you see shortages in technical human resources relating to our industry. Simply can't get enough of the talent, to help with the expansion. We think the decoupling and localization issue, which we think is going to accelerate even further because of the conflict, continues to put pressure on lead times for equipment. Lead times are still very, very lengthy, between 9 months and 12 months for back-end equipment, and for front-end equipment, sometimes a year and a half to 2 years or even longer. We believe that semiconductor content in a number of industries will continue to grow no matter what, in autos, and in artificial intelligence, edge computing, etc. But at the end of the day, despite all these positive trends, we are still in a cyclical industry, and the world has been hit by significant geopolitical ruptures, and obviously energy is going to cause inflation, and coupled with sanctions, I think the world is a very uncertain place now, or a lot more uncertain place than it was only a month ago. In terms of how the Russian-Ukrainian conflict will affect the semiconductor or the electronics industry, you may be aware Russia and Ukraine are large suppliers of chemical gases, C4F6 and neon, which are used in wafer fabs to etch chips. Ukraine produces 25% of the world's neon. Russia is at 40% of the world's palladium, which is used in catalytic converters for car exhaust. Of course, South Africa is by far the largest, but still, in an already pretty tight supply chain environment, this problem is not going to help. Russia is the second producer of aluminium, far behind China. This is used in many electronic devices. Nickel, Russia is the third largest, plating and also in batteries for EV. So you may be aware that nickel was even suspended on the LME as they try and sort out the debacle going on there. Ukraine is the sixth largest producer of titanium used in mobile phones and PCBs. And I think also don't underestimate the issue that this conflict is having on the relationship between the US and China, as China basically is siding with Russia over this issue, and that is not going to help the issue relating to decoupling. If we look at overall global growth, this was pre-conflict. I think all these numbers are going to be dropped down at least between 3/4 to more than 1.5%, depending on the region. Probably Europe will be hit the hardest. China actually came out with 5.5. I don't think anybody thinks they'll achieve that, given the situation, depending on how they can manage both their property issue and also high inflation for energy, because China is a huge importer of energy. So whilst I think it's still too early to really sort of have a concrete idea, global growth is definitely going to be impacted significantly one way or the other. Moving back to the company, so we generated 3.5 billion in EBITDA. So this was a substantial increase over the 2.9 for last year. We ended up net cash of 6 billion, down from 9.7. The main reasons were the increase in capital expenditure, 3.8 billion, an increase from 1 billion in 2020. The write-down of the Credit Suisse Supply Chain Fund, and the increase in dividend, which HANA is paying out. So we entered the year with around 6 billion net cash. It's still more than sufficient to meet all our requirements, and we are forecasting between 3.5 to 3.8 billion, including our Korean operation for this year. Moving on to our silicon carbide business. Silicon carbide is a compound which is a marriage between silicon and carbon. It produces a very strong material, which has excellent properties for transmitting energy very efficiently, high amounts of energy. HANA founded PowerMaster Semiconductor in 2018. We established our own facility in 2020. We have designed our first range of devices, a silicon carbide diode, superjunction MOSFET, and some CINA diodes and FR FETs. And we are under development of our medium voltage silicon and very significantly the silicon carbide MOSFET, which is really the most important device, which we hope to introduce and complete by the middle of this year. All our devices have met top-tier competition performances and reliability and will withstand any IP challenges because we filed for and have received our own IP relating to the processors. Around the third quarter, the middle of last year, we received sufficiently strong confirmation of the performance of devices, which gave us the confidence to invest in a mass production line, which will be implemented in the late third quarter of this year. And so we're starting that build up, and we're having to invest heavily during the first 3 quarters of this year in order to launch mass production in Q4. We believe that this venture will transform HANA's future growth, but of course we will incur some losses prior to meeting our long-term targets. All EV cars and chargers will use silicon carbide inverters. So the growth of silicon carbide will very much track the evolution of the EV car. Our PowerMaster operation is well positioned to be a leading player because we're the only Korean pure play operation at this point in time, and generating a lot of interest domestically. Plus, China is very interested in our capability because we're not considered a Western company. The big companies like ST Micro, Infineon, ON, Rome, Mitsubishi are all considered Western suppliers, whereas Korea is sort of a little bit sort of Asian on the fence. Okay, so PMS will work with HANA's key, main operations to expand and develop our back-end assembly of the devices that will be produced in Korea. And it is our intention to go into the module business within the next 2 years going forward, which is a very different and new business for us. Revenues are projected as follows. You can see from this chart here. We will have some revenues this year because we're using our prototype lines, but we won't get full production coming in until very much the end of this year. So next year is when we start getting bigger increase because we'll have a full year of mass production. As I mentioned earlier, by the middle of this year, we'll have our superjunction MOSFET, if all goes well. But it takes quite some time for the auto industries to qualify this, at least 1 year. So we won't really see orders coming through until 2024. That's why you see a big jump going there. And then going forward, as we ramp up, we hope to break even by the end of 2025. Gross margins, when you have full operational efficiencies, are running at about the mid 30% level, which is about double what I can achieve currently in my EMS and OSAT business. Again, one of the main reasons why we're focusing on this. But because of the heavy investment that we'll have to make in terms of human resources and facilities to prepare PowerMaster for mass production by the fourth quarter, we will incur significant losses in Korea, which will consolidate into HANA's at least in the first 3 quarters of this year. And I'm guiding this to be between 580 to 620 million baht will impact the group's operating profit over the course of 2022. Silicon carbide MOSFET is a key driver. And as I mentioned, we'll launch it by the middle of this year. And it, of course, is very important for the auto industry, but many other high-powered industries like rail, wind power, etc. So this is a very important device, a milestone device for us to be able to deliver, successfully. You talk about modules. HANA wants to produce modules over the next 2 years, and every inverter has a range of modules. every EV car needs an inverter because you have to convert the energy from DC to AC. So an EV car must have an inverter, and every inverter has 14 modules approximately, and every module has 6 packs. So and one pack has 2 devices, a silicon carbide diode and a MOSFET. Some of them will have a diode and a silicon device, but the mainstream EV cars going forward will probably have silicon carbide diode and silicon carbide MOSFET. And therefore, every EV car, and I'm talking about mainstream cars, will need 84 diodes and MOSFETs or more, depending on the power requirements. So EV continues to grow rapidly. Last year, it grew over 100%, and it's still less than 10% of total cars produced. So that's why we believe there's at least a 10-year growth cycle for this industry, because there's a long way to go to convert the majority of ICE cars into EV cars. And China is the world's leading producer and consumer of EV cars. Last year, they produced approximately 50% of all EV car sales. So maybe I've gone on too long. I open the floor for questions.
Okay, so I think if there are no any questions, the session has come to an end. Thank you very much, investors and HANA Microelectronics, for joining the conference. We hope to welcome you all again in the next quarter. Thank you very much and have a good day. Thank you.